Hello, everyone. My name is Christina Long. I am the proud president and CEO of Create Campaign Incorporated, and we are so pleased to have you join us today as we cover a very important topic. There's lots of conversations around the Paycheck Protection Program, but what exactly does it mean, and how do we prepare ourselves to take advantage of it?
Joining us today are our presenters from Larson. The first is Lori Jensen. Lori grew up in Wichita, Kansas and graduated from Wichita State University in 1985 with a Bachelor of Business Administration and minor in accounting. She started with the firm in 1985. She received her Certified Public Accountant certification in January 1993. She is a strong supporter of community and is affiliated with a number of professional organizations, including having a membership in the American Institute of Certified Public Accountants, Kansas Society of Certified Public Accountants. Lori is married to Damian Jensen and has one son, Logan. In her spare time, she enjoys traveling, spending
Next
time
up,
with
we have
family and
Sean
friends,
Bauman.
following
While
both
working
the
in
Kansas
the
City Chiefs
long-term
and
care
Wichita
pharmacy
State
industry for
basketball.
15 years, Sean developed a passion for financials and the stories they tell. He went back to school and obtained a bachelor's degree in accounting with a minor in management from Wichita State. He has spent the last decade working primarily in public accounting, including both audit and tax work, and a couple of years in the private accounting realm. Sean enjoys helping small businesses and individuals understand the story their financials tell. By explaining what has occurred in previous chapters of the story, he says he can help them plan the rest of the book. He has worked with a variety of clients in the manufacturing, healthcare, service industry, and many more. Blessed with a wonderful family, including a wife and 5 children, there is never a dull moment with Sean. Thank you very much for joining us today, Sean. And rounding out our presenters is Jennifer Westhoff. Jennifer is a Kansas native. She earned her Bachelor of Business Administration from Wichita State University in 2016. Jennifer also earned a Bachelor of Social Work from the University of Kansas in 2002. Having a dual degree in social work and accounting has given Jennifer a special perspective when assisting her clients. Jennifer became a part of the Larson Company PA team in November 2005. She provides auditing, accounting, and tax services to clients in a variety of industries. She is married to Brian and has one daughter, Gloria. When not working, she spends time following the South High wrestling team coached by her husband. Jennifer, thank you so much for joining us today.
We're a firm that our home base is out of Wichita, Kansas. We audit, we do financial preparation, we do tax returns. We help clients in any way that we can think possible and help them achieve their goals in their everyday accounting world. And then it kind of meshes also with their everyday life too.
Create Campaign, we are pleased to be a 501c3 tax-exempt nonprofit that really works to help minority business development in the areas of providing workshops, trainings. We have access to microloan funds, a wonderful mentor and resource network. You can learn more about Create Campaign and the work that we're doing to advance urban entrepreneurship by visiting us at www.createcampaignks.com. As it pertains to the information that you'll receive today, we just need to make clear that this is information only. This does not constitute legal or personal financial advice, nor does it equate to a personal client relationship with either the Create Campaign or Larson. You know we have to get those disclaimers in. All right, so with that being said, let's go ahead and dive right into the heart of our presentation, beginning with how do you know if you're eligible?
Our goal today is to discuss who is eligible for the Paycheck Protection Program loans, and if eligible, how they can go about getting a loan. But first of all, we did kind of want to, leading into this slide, give you a kind of a quick overview about how the PPP came about. If you remember back in March, Congress started passing laws right and left in order to aid the effort of managing the impact of the coronavirus pandemic. The first act passed was actually just kind of focused more on the healthcare side of things with prevention and vaccines. But by mid-March, the impact of the pandemic was being felt by employers and employees all over the country. And so in response, Congress passed the Families First Coronavirus Response Act, which we call FFCRA. This allowed employers to get a credit for a certain amount of wages that they paid to employees who were unable to work due to reasons related to the coronavirus. Then at the end of March, Congress passed the Coronavirus Aid, Relief, and Economic Security Act, which is what we call the CARES Act. It was passed with the intention of assisting businesses and people to get through the pandemic. Included in the CARES Act was the Paycheck Protection Program, which authorized forgivable loans to small businesses to pay their employees during the COVID crisis. After the implementation of the CARES Act, there have been numerous additional legislation and executive orders to expand not only the CARES Act and the Paycheck Protection Program, but also to address other issues brought on by the pandemic. So most recently, Congress passed the Economic Aid Act on December 27th, which, among other benefits, reopened the first round and opens a second round of PPP. Early on at Larson Company, we did recognize the impact of the pandemic on our clients' businesses, and we were in a unique position to be able to support our clients in navigating the PPP and other benefits of the FFCRA and CARES Act. Because the legislation and related guidance was coming out so quickly and changing so rapidly, we actually dedicated specific staff in our office to keeping everybody updated on what was available to our clients and formulating ways of reaching out to our clients about those things. So as we kind of jump into this today, we just want to say that we truly do understand how overwhelming it is navigating during this time, especially for a small business. We know that many small businesses in our local community are still struggling, and we really hope that the knowledge that we've gained this past year will help those businesses access the resources which are meant for them. So we'll dive right in and talk about the PPP. So we're going to first kind of talk about the first draw loans, because in order to even be considered for a second draw loan, you have to have received a first draw loan first. Almost any business can qualify: a nonprofit, a sole proprietorship, self-employed or independent contractors, partnerships, S corporations, corporations, veteran organizations, tribal concerns. There are very few organizations or businesses that I can think of that don't qualify, that we would, that you would probably be working with Christina too. So I think one of the examples I was thinking about as I was driving through town today was, an independent contractor who's out shoveling driveways and clearing sidewalks. He maybe isn't registered with the state of Kansas, and he doesn't really consider himself to be, a business person. But because he's an independent contractor, if he's reporting his income on his tax return, he qualifies for to try for a PPP loan. So I think it's really important that people understand that the term business is pretty broad in this example. For the first draw loan, you did have to have 500 or fewer employees. There are some exceptions to that though. So if you were in the restaurant industry, for example, or maybe a part of a franchise, you may be able to meet an exception. And I think the last kind of, maybe not eligibility requirement, but something we wanted to point out at this point was that there is no credit history requirement. There's no collateral requirement. It's 100% backed by the SBA. So the standard loan approval process generally required by lenders does not apply to the PPP. So we just really wanted to put out there, please do not be discouraged or allow any past borrowing disappointments prevent you from applying for a PPP, because it's a very different thing. In addition to not requiring you to be approved for the loan, you don't even really have to provide any financial documentation at the time of your application. You do have to certify that you have a need for the loan. And I think the wording on the certification is basically that allowed for most businesses to be able to say that they were facing economic uncertainty, because in the CARES Act, they kind of address that pretty much any business or individual for that matter is facing economic uncertainty during a pandemic. Have until March 31st to apply for a first draw loan or a second draw loan, or potentially both. So how are my loan proceeds determined for a first draw loan? Once you've determined that you're eligible to apply, you calculate your loan amount. The calculation is slightly different for every type of entity, and I'm going to run through those that are listed on the slide, but then Sean's going to go through an example of the calculation and a loan application preparation process to kind of help us get a better idea of what that looks like, because it's a lot of words, but I think that actually seeing the picture will help. In addition to what we've put up here, later in our slides, we actually do give you a link to the U.S. Treasury website, and it has a great tool as far as how to calculate loan amounts for first draw or second draw loans. But I use it on almost every client that I've been working with, just because it's such a fast way of reading through it and making sure we've accounted for everything. If you are self-employed and you have no employees, the way that you will calculate your PPP amount is by pulling your Schedule C off of your individual tax return. This will be probably your 2019 tax return. And you will take the amount from line 31 and you will divide it by 12 and multiply it by 2.5. And if that is your loan amount, the only documentation you're probably going to need to provide in that case is that copy of your Schedule C, just so that they can verify the loan amount. And then that's actually all you would need for forgiveness too later on. So for a sole proprietor or self-employed independent contractor reporting just on their individual tax return, this is a fairly straightforward process without a lot of paperwork involved. It is also possible that you report on a Schedule C, but that you also have employees. For any business with employees, you are allowed to do a calculation that includes all the wages that you've paid to your employee, and that can be everything from salary to paid time off, vacation time, sick time. There's very little in the compensation world, commissions, tips, all of that counts. The only exception to that would be in 2020, if you're going to end up using your 2020 payroll, you would have to take out any FFCRA wages for people who were being paid when they weren't able to work because of coronavirus. So otherwise, all wages are on the table. In addition to wages, if the business pays for any of the employees' health insurance or retirement, any kind of benefit that the company might pay for an employee, you would also get to count that into your calculation. And lastly, state unemployment. Kind of shown you a very basic example of a calculation without a lot of details, but most clients, if they're paying payroll, they're probably using some kind of payroll software, whether it's QuickBooks or QuickBooks Online, or if they're going to a payroll service or something like that. You should hopefully be able to obtain just a full year's payroll summary with totals. And from those totals, you're going to take your gross wages. The only thing you have to watch for is if you have any employees who were paid over $100,000 in 1 year. If that's the case, you'll have to limit that employee's wages to $100,000. You can't go over that per employee. And then in addition to the wages, you can add in any health insurance or retirement benefits that the company paid, not that you withheld from the employee, but that the company paid. And then state unemployment tax that the company paid. And then you can add in your owner's compensation. For a Schedule C, this is the line 31 off of the Schedule C, limited to $100,000. So if you made $14,000 on your Schedule C on line 31, you'll put $14,000 there. If you made $120,000, you'll put $100,000 there. You take your total, you divide it by 12, multiply it by 2.5, and that will be your loan amount. That's how it will be for a self-employed person that reports on a Schedule C that has employees. It's basically the same for an S Corp or a C Corp owner and a partnership owner. For a C Corp or an S Corp owner, they generally pay themselves with a W-2. And if that's the case, you're allowed to include, your 2019 owner W-2 into this calculation. You don't go ahead and include any health insurance or retirement benefits that the company paid, because those technically should already be in the W-2. But if you didn't take a W-2 or a salary from the company or any kind of wages, and you just took distributions, the distributions unfortunately will not count in the calculation. For a partnership owner, you have to go to the K-1 in order to calculate the owner's compensation to be included in the calculation for the Paycheck Protection Loan. On the partnership K-1, towards the bottom of the first page, there's line 14A, and it's for self-employment earnings, and that's the number that you're going to pick up. Also on the K-1, you should be able to see a line for any 179 depreciation expense or depletion, possibly unreimbursed partnership expenses might be listed on the notes somewhere. If you have those numbers, you do need to decrease the line 14A number. Then, once you have that total, you'll multiply it by 0.9235. That's 0.9235, and you will put that sum into the calculation with your employee wages to calculate your loan total. I've kind of went through all of those, and I'm going to turn it over to Sean to talk us through an example.
All right, well, if you can already tell, Jennifer was definitely one of the people that was a point person for our firm in getting through all the COVID legislation the last year. We are grateful for all the work she has put into it. I'm going to talk to you a little bit about an example of how you would turn your Schedule C into a PPP loan amount. So for those of you who are visual learners, hopefully these next two slides will help you make sense to you. The Schedule C is a portion of your 1040 that reports whether your business that you operate produces a profit or a loss. So here we've got an example where the Schedule C income from a sole proprietor ended up with $50,000 in profit after all income and expenses were taken into account. You then need two more steps to calculate your PPP loan amount, which is taking that $50,000, dividing it by 12, and then multiplying that number by 2.5. And there you get a total of $10,417 rounded. So that will be the amount that the PPP loan will be sent in for. And next slide, we're going to show you comparing the Schedule C to the actual PPP application that is available on the SBA website. So if you look, we have the Schedule C from Jack Sample, his business, Not a Hobby. And numbers, of course, are never going to be this easy, but clarity's sake, we're going to use some nice round numbers on this example. As you can see, he had an income of $80,000. And then after taking away all the expenses that are listed on the Schedule C, he ended up with $50,000 in profit. And so we're going to go to the bottom of that line of that Schedule C on line 31, and there's where you get your $50,000 in profit. So we're going to divide that by 12, and you get $4,166.67. And then if you look on the right side of the screen, you're going to see your PPP application form. And in the middle of the page, there's that average monthly period where that number goes into. And then to calculate the PPP loan, we're going to take that $4,166.67 and multiply it by 2.5, and we get a number of $10,417. And that'll be what the PPP loan is put in for. And while we're looking at the application, I want to note some important things on here. Number one, in the top left-hand corner, you're going to want to click whatever entity you are. Jack is a sole proprietor, so we've noted that for him. Under the business legal name, for a lot of people, that's actually just going to be your personal name. But if you have formed a corporation under a different name, then you'll use that. What it depends on is whether you're using a federal ID number or your social security number on that business TIN number there in the middle of the page. So if you're using your social security number, your business legal name should be your personal name. And then another important code you'll want to get in the middle of the page there is the NACIS code. Here you see that Jack's is 561300. And if you go back to the top of the Schedule C, top right-hand corner, you'll see that number there as well. That'll be important. We'll hit on in a little bit later, because depending on if you have a code that begins with 72, because you're in the restaurant business, you can actually calculate a little bit higher rate to get your PPP loan. So then underneath, back to the middle of the page where we've calculated our PPP loan amount, there's a section that says the purpose of the loan. And there's a lot of different boxes there. You can click on payroll cost, rent, mortgage, covered operations. What we are recommending right now is that you click all of those, because we want to try to take advantage of any of those expenses we can. The one caveat would be is that 60% of the expenses need to be directly related to payroll. So you can't use just rent to cover what you get on the PPP loan. The intent of the law was to keep people employed. So 60% of that expense must go back to payroll cost. And so you want to get all those checked. There's a couple more pages to the application form, but this is the meat and potatoes of it, to where this is where the information you put in is going to be important that it's correct.
Applied for the loan before all of the guidance was available, you may have missed some of the amounts that you could include, especially as they relate to owner's compensation. And so there is an opportunity to correct that now, and we would be happy to answer those questions for anybody too. So now that you're kind of familiar with the basics of the Paycheck Protection Program and you have an idea of the loan application process for the first draw loan, we're going to move into the second draw loan and what those requirements are. As we mentioned earlier, you have to have already had a first draw loan in order to qualify for a second draw loan. In addition to that, when you apply for a second draw loan, you have to certify that you've used all the funds for the first draw loan on qualified expenses, and that you've actually used all the funds by the time you're applying for the second draw loan. Technically, you don't have to have already received forgiveness on your first draw loan to qualify for a second draw loan. But if your loan on the first round was over $150,000, we'll probably tell you that the bank and the SBA are probably going to require you go ahead and apply for forgiveness on the first round. The second draw loan is limited to 300 employees, which is a little different than the 500 that they allowed on the first draw loan. So we are talking a little bit smaller businesses. And then the big kicker, I think, that kind of catches people is that you do have to show a 25% or greater reduction of gross receipts in any one calendar quarter when comparing 2020 to 2019. You also have the option that if you have your 2020 business return finished, you could also obtain the loan by showing that you had a 25% or greater decrease in gross receipts from 2020 to 2019, the year over. But you only have to show that you had a decrease in one calendar quarter. So for example, in looking at second quarter, which is April through June of 2020, and if you compared it to your April or June figures from 2019, you could, and you had at least a 25% decrease, you would that would potentially qualify you for the second round of the Paycheck Protection Program loan. And by gross receipts, we're basically talking about what your customers pay you. Not after all of your expenses. We're talking about the deposits you put into your bank or into your ledger book or into your QuickBooks, your top line of your income. If you have an accounting software like QuickBooks, you can run a profit and loss report for each quarter and show a comparison to be able to determine if you meet the requirement. But we don't want you to be discouraged if you're not using an accounting software or have an accountant out there. It can be as straightforward as if pulling your bank statements and circling all your deposits for those time periods and comparing. If you get 1099s from your customers, you could also provide 2020 versus 2019 to get an idea. That's assuming you have your 2020 tax return ready to go. But there are other options besides having to pull something from an accounting software. There's no requirement that it's an audited financial statement or a reviewed financial statement. It doesn't have to be fancy. For from what we've seen, I think they're pretty open to whatever they can be provided. And technically, if your loan's below 150,000, you don't even have to provide the support at the time of the application. But we do recommend, if possible, that you go ahead and do that, just because it saves you a lot of heartache down the road if you realize, gosh, we only had a 22% drop, and now this is a real loan I'm going to have to pay back. So it's better to find out now, even if you want to hold off on submitting the paperwork because you want to make it look nicer or whatever, although that's, again, not a requirement. You've determined that you've met the gross receipts reduction, you've got less than 300 employees, and you've already had a first draw loan. You can then basically use the same methodology as you did for the first round of loans to calculate your loan amount, as far as using your payroll numbers plus your owner's compensation. Determine you meet the requirements of the second draw PPP, you will then use the same method as the first draw loan to calculate your loan amount. So you'll get to include your payroll numbers, salary, wages, health and retirement, other benefits paid by the company, and state unemployment tax, plus your owner's compensation. Same thing again, you'll pull from the Schedule C if you're self-employed, or your W-2 wages if you're an S Corp or a C Corp owner, or your K-1 if you're a partnership owner. And you'll calculate the loan amount the same way, basically, with one exception. If you are in a restaurant or certain type of food service industry, and you'll know that you qualify because your NAICS code will begin with a 7-2. If you have an NAICS code that begins with 7-2, then you actually get to calculate, you get to take your payroll amounts, and you'll end up getting to multiply it by 3.5 instead of the 2.5. And all other borrowers are still limited to the 2.5 times. Another thing to keep in mind on the second draw loan, most people use 2019 numbers, of course, on the first draw loan, but on the second draw loan, you are allowed to choose to use your payroll and owner's compensation numbers from 2020. You can choose which numbers that you use. So I'm going to turn it back over to Sean to give you some more details on the application and lending process, and also some general forgiveness information.
Okay, so now that we've gone through all that, the question is, how do I get in touch with my bank? Where do I go? What all is that going to involve? So here's a list of some items that the bank may request when you turn in your application. Now, if you already have a relationship with the bank, then they may have a lot of these things on file already, so it won't be necessary, but it's good just to have that handy just in case. So the driver's license, the certificate of existence and authority, or a certificate of beneficial owners may be required. The payroll reports for the pay periods that you're claiming on some of the deductions. The articles of organization, your operating agreement, if you're an LLC, or your articles of incorporation and bylaws if for your corporation. And they may request your business and individual tax returns, one or the other, or both. Again, that'll be dependent on the bank. Each one's a little bit different, but just be prepared to have this stuff handy in case they ask for it. And how and where do I apply? Well, your best option is probably going to go to your current bank and see if they are accepting SBA PPP loans, because again, you've already developed that relationship with them, and it's going to be an easy ask to find out if they participate. Now, if you don't have a bank, or you find out that the bank you're using does not offer those, then there's other options you have, as far as, just checking with people in your peers or mentors, people in your network of businesses that you're involved with. See if they've had any luck going through their banks to get the PPP loans, any other professionals you might work with on a regular basis. We here at our firm, we've certainly developed a lot of relationships, not only the ones we've had for several years, but just in the last year, getting to know banks that are really good at processing the PPP loans. So you're welcome to reach out to us, let us know if we can give you some recommendations. The Small Business Administration has a tool on their website where you can search for lenders in your area as well. So we will post the link to that website at the end of this presentation. But it allows you to punch in your zip code and other information, and it'll actually point you to some banks in the area that are doing the SBA lending. And we have touched a little bit on forgiveness. We'll go into a little bit more detail on that now. For the basic information you get when you can choose an 8 or 24-week period for when after you receive your proceeds to cover all of your expenses. A lot of people are using a 24-week, but if you have used those in the 8-week, then you're certainly welcome to use that time frame. All of the eligible expenses from your PPP funds are also deductible on your tax return. The good news is at the end of the year, Congress did pass the law that said that any funds that you use for your day-to-day expenses are also deductible on your tax return. So there's no worries that the money you spent will not be something that you won't get a benefit from when you do your taxes. And the amount that you receive from the loan is also not taxable as income on your tax return. So, you know, if going back to our example, if you had a $10,617 PPP loan, that is not something you have to report as income on your financials. So we've kind of hit on some of the expenses eligible for forgiveness, but just to go over those again, those are going to be your payroll costs, mortgage payments, rent, utilities, things your operational expenses or supplier costs that are involved. And again, it's very important to note that your payroll cost will need to make up at least 60% of those expenses in order to obtain your forgiveness. But worst case scenario that your PPP fund is not forgiven, the interest rate is very small. It's only at 1%, and it has a 5-year maturity rate to it. So it's not like you're going to get hit with a huge, you know, like a credit card style expense of 10, 20%. 1% is fairly reasonable. Again, as we stated, it's, you know, the intent was to make all these forgivable, but just in case if you don't get it all done, you will have not a whole lot of interest to pay on that.
We've included for you here the SBA website this link should take you directly to their informational page about the Paycheck Protection Program loan. The U.S. Department of Treasury also has a link, and on their link, I find it's actually easier for me to navigate because it's all just right there on one page, but you can find all of the applications to apply or to ask for forgiveness right there. So both of those links I think are very useful. And I think kind of in summary, I mean, today we're talking about the paycheck protection loans and how to get one. And it's a great tool and a great resource for small businesses right now. We know from our clients that those loans have helped people to survive the pandemic so far, and the second round really couldn't have come soon enough. So, but in addition to that, we do want to point out that there are other resources that are available to employers, and a lot of things that changed with the legislation that passed in December. Obviously, we don't have time to go through them all today, but the employer retention credit was originally something that you either had to choose to take the credit or to take the paycheck protection loan. And that was something they changed with that legislation. And now it's possible to simultaneously be getting benefits from both. There's lots of rules with that, and there's a lot of calculations, but I think if you have employees, that's something that's really important to look at, especially as it also carries into this year. The economic injury disaster loans were also something that was available to people. There have been grants through Sedgwick County, through the state of Kansas, all federally funded. And in addition to that, there are also some unemployment options for people who are self-employed. So the paycheck protection loan has certainly been, you know, a lifesaver for many clients, but there are also a lot of other things that are available. And so, you know, if somebody needs help with that, we'd love to help them kind of figure out which direction to go in. So.
One of the items we did want to point out is that with the pandemic, it is fluid. Everything changes. I think we can all attest that it seems that every Friday before the weekend hits, Congress is passing some kind of legislation, or they're giving us more information on how they want items processed. So with that said, we want people to know that things change all the time, and that if they need any help or any additional resources or just any questions that they have, just feel free to reach out to us. We've put our website there and also email addresses to reach Jennifer or Sean or myself. Feel free to reach out to us. If by chance we don't get back with you, then please call. Don't let us just drop with an email. If you don't receive an answer, just call us and we'll make sure that we return the call also.
Sounds good.
Thank you all so very much for this information. You all not only gave us a lot of detailed information, but you did it in a way that we could understand with just plain speak. And so the last question that I would love one of you all, or all if you would like to address, is there was a lot of confusion that happened around the first round of PPP, whether the loans were forgivable or not. And from some of the entrepreneurs who I worked with, that confusion caused them to not want to be part of the process at all. What advice or recommendations would you all give for this round to those who might have been turned a little bit off by some of the information that came through the first time? Should they give it an effort or look into more information this round based on you all's opinion?
Absolutely, they should give it another try. There was a lot of misinformation out there, and even now, I still hear that the different, the press dealt with it differently in the community. The way that I would hear people talk about it on Facebook, who weren't even entrepreneurs, everybody had an opinion about it, and a lot was happening very quickly, and the guidance was changing very quickly. What we can tell you now, though, is that the questions that we had then have been answered, and we think most of them were answered in a very borrower-friendly way. We definitely want to see our small businesses in Wichita thriving, and I think this is one way that they can continue or get back to the point of being able to do that. We've had a lot of success with our clients asking for forgiveness. I don't think I've had any rejections. I haven't. Lori, Sean, I don't know what you've seen, but and so, even if they've already taken something out and maybe they were having a struggle with the forgiveness process, reach out to us and let's see if we can maybe give you some direction on something that you're missing in that puzzle and get you moving along so you feel confident in applying for a second loan.
I'll just say definitely don't be afraid to ask for help. I mean, we're all here in a community to help each other out, and there's some things that I'm terrible at, and so I hire people to come do that for me. And so, if you're not a PPP expert, there's definitely people like us out there that are willing to help you navigate that. So don't be afraid to ask for help.
I think it's a difficult process, but it's a process that we can help people through. It's very attainable. They put the PPP out there for businesses so that they can survive. The second round is especially geared towards small businesses and especially restaurants, food services. They understand that they are going through a hard time, and we see it in our community. We see it all the time in our community. Our restaurants are closing. So please, if you own a restaurant or if you're in the food industry, please look to see if you can grab a loan.
On behalf of Create Campaign, I just want to thank you all for taking your time to not only give us this information today, but to also preparing to deliver it in a way that, again, is personable, relatable, and is very clear. It takes great partners to be able to create a strong entrepreneurship ecosystem, and I am so grateful and thankful for the new partnership that Create Campaign has with Larson Company. With that being said, you all have a wonderful rest of your day, and thank everyone for joining us for this training.